We got some big numbers this morning that are important. We've got the employment cost index coming in a little bit lighter than anticipated and down from the prior quarter. It comes in at 1%, down from 1.2% in the first quarter, which would be good news for the Fed. We'll get the breakdown on that and see what the wage component was in just a moment. Personal income rises 0.3. That's a little less than last month's 0.4, and down from the 0.5, the 0.5% that was anticipated. Actually, the May number was revised up to 0.5%. So slowing there, but we did see that in the overall GDP numbers. Spending comes in at, as I said, 0.5%. Real personal spending at 0.4. So not a huge inflation effect. And then those PCE numbers that everybody from Lisa to Jay Powell are watching. The deflator comes in, the headline number comes in at 0.2%. That's a little bit faster than last month, but it was what was forecast. And so on a year-over-year basis, headline PCE is 3%. The core is 2%, 0.2 gain. So that comes in at 4.1%, and that's lower than anticipated and certainly lower than 4.6% last month. So, Lisa, we've got basically the same story we've had for much of this week. The data come in line kind of with what the Fed wants. Not all perfect, but better than it has been.
Mike, when I'm looking through these numbers, it does seem to confirm this Goldilocks scenario of slowing growth, slowing inflation, but still robust consumer spending. How reliable, how significant is this data showing an upside surprise of personal spending even as incomes fall off just a touch? Well,
it's kind of what the story we've been seeing. It is interesting that we get a little bit of an upside surprise in personal spending because the GDP numbers suggested consumer spending had fallen off. So maybe that was weakness in April and May, and June comes in better, which sets you up for a little bit better spending going into this third quarter. And obviously, we've got back to school coming up, which will be an important measure for retailers. The other numbers that come in better than expected, they're not going to have a huge impact right now because we get a lot of data between now and the next Fed meeting, but it does show that things are going in the right direction. And so maybe Jay Powell gets the board of governors together and they'll go out for happy hour today or something.
You've been digging under the numbers. What do you see?
Yeah, let's look under the hood at a couple of things that Jonathan was talking about. The ECI for wages goes down to a 1% gain from a 1.2% gain in the first quarter. And that would be considered reasonably good news. But then when you look under the personal income figures, wages went up 0.6% in the month of June, and that is up from 0.5%. It is actually the highest increase since January. So we have two sort of contrasting views of what wage pressures are doing at the moment. And John mentioned, as we do every time we get an inflation figure, the super core, which is Jay Powell's favorite thing. Core services ex-housing comes in at a 0.2 gain, 0.22 if you want to round it out to three figures, and that puts it at a 4.1% increase for the year, which is going to be your lowest since basically last August. So things moving in the super core direction, take out housing out of the equation, and services for the PCE, like the CPI, are down. But the wage numbers still healthy, and that suggests consumers can still keep spending. The question is, will the Fed see that as inflationary?